Hey, Casey. Wow, that was
Hey,
fast.
Casey.
Oh, damn. Wow, that was
Hey,
fast. Have myself talking over. Hello, Jan. Hello, guys. Give me a sec. I'm about to post links everywhere, so it's gonna take me a second. I'm posting in the right place. I'm not sure. Yeah, seems like. Hello, ladies and gents. Give me a sec. I'm about to start in a second. It's gonna post everywhere. Right. Hopefully, also, I'm not gonna forget to turn on my screen. Here it is. So that's done. We're all good with that. All right, perfect, perfect. Let's let a couple more people join in. In the time being, we're gonna see how the S&P is opening up, unraveling. So far as you can tell, it's pretty much exactly as I said. I think I'm gonna make the bulls happier today, at least temporarily. It seems like we're gonna have a little bit more of a bullish day. Although, as I've said before, people who don't really execute on these positions, it's kind of meaningless. It's just so if what does it matter if we might potentially be up today a little bit if you don't really capitalize on this? And at the end of the process, all in all, because we have the FOMC today, and the way the market is positioning itself, which is indicative of a larger time frame, we might find ourselves lower. So, all in all, if we're going to be higher for half a day, it doesn't really matter. Although it does look, I gotta say that it does look right now a little bit more bullish so far. Things panned out exactly as I've said yesterday on the call. Those who joined the live yesterday, or at least watched it afterwards, there is a gap right here. There is a hole, and as I was thinking, expecting Microsoft to retrace all the way back, exactly as I was saying, basically, per my prediction, to see this. So, as you can tell, we corrected all the way up. In pre-market, exactly as I said, we continued in post-market, pre-market, finalized the whole process. Henceforth, not surprisingly so, we've seen the indices correct upwards. And exactly as I said, right, if we're going to have, for example, well, here it's a little bit more visible. If the gap was right here, just like I said, we're going to have right about enough momentum, pardon me, just a little bit higher. It's there, you can see. And the second high point, which actually is slightly hard to see because here it is. Let me zoom in so everybody can see exactly what I mean. As you can see, the hole was this, right? You can see it opened up right here. These were the last sticks. They're very, very tiny, barely visible, right? So you can see these. Yeah, useless. I hate calling you useless. It just feels unpleasant. I'm gonna call you facts. Yeah. So as you can see, just exactly as I predicted yesterday, we had right about enough momentum with all in all. So the way it was indicative on the chart will make it roughly towards the edge of the bottom of that gap, right? So we're not really truly going to be able to close it. So no surprise, that's exactly what we got, right? That correction, it correlated with the pre and post market movement that we were able to see, right? Because if you can calculate where the market is going to end up closing and opening according to where it closed, according to the price action that was happening throughout the night and the morning, right? This is a continuous contract, so here we can see everything, sort of the pre and post market included. Oftentimes the market likes to correct if overnight, it doesn't matter what price action we had overnight, oftentimes the market likes to correct back down as close as possible towards this location of the opening, right, of the gap. But really, in this instance, we didn't really have that, right? The market ended up opening with this gap. But right now, if we're going to focus, and again, we're going to do something very rudimentary, very simple. We're going to look at how the momentum is poised to sort of play out in the near term future, in the next hours and so forth, before we get the meeting. So if you're going to look at this, for example, we're already positioned to continue going upwards, which is fair completely. There are no shticks or tricks here, although we have sometimes these intermissionary kind of these in-between processes. Still, we can argue we already had one. It's almost like skipping rope, you know, big jump, small jump. So we're starting to correct upwards. In fact, we're going to see confirmation for that. 5 minutes doesn't really matter. That means, for example, so if for the next 15 minutes, what you saw from the 1 minute, right, is poised to go upwards, so that means probably to get entangled still within this resistance. 5 minutes implies that potentially we're going to be moving towards closing that gap, so a little bit of downwards, right? Remember, nothing is linear, it's more of a process, because from the 5 minutes, the price action we can extrapolate, which can potentially be brought downwards, right? Potentially anytime soon. And once it does that, we can potentially close that gap. So far so good, nothing really big. We can probably, we're probably going to find ourselves testing the bottom of that gap and reverting back up. Why am I saying that? Because the further out you go, you realize, for example, 30 minutes still has some fuel in the system, right? So we have this to go, and once we penetrate the overbought territory, usually this amplifies the already buying trend, and while we're switching over, going through this transition, right, of convergence and divergence of the bullish and bearish momentum, if you will, that convergence time actually allows us to have a little bit more momentum upside more often than not. Spending this time more often retains an upside position, although this is a bit of a, well, not really the way it really often plays out, but if you would have been able to be patient and sort of withstand the whole pain, you would have been able to see that all in all, at the end of it, you would have been able to exit even higher, or at least the highs that were very, very temporary. In other words, this is very simple, very rudimentary, and the way it's poised the same way it does before, here it's poised to move upwards. In other words, giving you somewhat, after correcting, giving you somewhat more movement up. In fact, the 5 minute potentially does not imply that we have enough momentum in the system to close the gap. We might make it down to somewhere halfway, correct back up to what we recognize here on the 30 minutes. Hey Alex, what's up? My pleasure, brother. Thank you for showing up. Are you kidding me? So the same thing on the hourly. As I said, I'm going to make the bulls happy today, at least temporarily. Sorry to say, but that's the reality of everything. That's temporarily because, again, as you saw on the smaller time frames, potentially we have enough to close the gap. But then again, on the further out we go, 45 minutes, for example, 1 hour, for example, it seems as if we're about to move upwards, right? Let's go 4 hours, same thing, we're still on our trend up. You see the blue line here, which is the bullish, basically. The K is dominant. In other words, right now we're bullish overall on this particular time frame. The 4 hourly time frame, it's very significant and a very convenient time frame to look at because in essence, it's the daily chart, not including the pre and post market. So it kind of gives you a very good perception of the chart, not looking at on the daily, because on the daily it will be slightly readjusted. As you can tell, slight difference, and hence the measurement is going to be different. In fact, so much so, notice, right? Here we're halfway through. We're halfway through the trend. And on the daily, as I said, there's a lot of bullish momentum potentially in the system. In fact, we already did this convergence and divergence back up right here, right? So you see the dominant right now is the K, is the blue line basically, represents bullish, oftentimes switches over right before we run up. Makes sense. Everything is perfect. So potentially, in fact, as I've said yesterday also, and it was kind of visible in the system, all in all, even if we spend some time, and I said, I sort of remarked this, how it will be a waste of time. Oftentimes we end up, when we open these gaps, and I've actually mentioned this in the video, I'm not sure at what moment, but I have, we end up wasting time on these processes. All in all, it looks like this day potentially is going to be rather bullish. In fact, we might retain several days because remember, the reading from the day chart does not mean we're simply able to extrapolate to what just today might do. It actually allows us to look a little bit further down the line, but we have to understand that today, later down the day, we're going to have a very significant fundamental event that might turn things around, okay? It actually might, we might squeeze out this entire volume today throughout the day, correcting back into this original gap, right? Closing it, which, or at least part of it, because we can see, for example, today's price action penetrated just a little bit, but we haven't really gotten to closing the gap. the way this daily chart appears right now, it seems like we have enough momentum to either potentially get back into that gap, right, between 55. Actually, it's some of you don't realize, but there is a very interesting psychological support resistance, call it whatever, depending on where we're at 5,555.55. It's we're weird people, okay? I'm just gonna say that the people who work in the industry are very weird. We like numbers. That's our kink. That's the reality. So there is a weird support resistance there. And so what can happen also, that what happened coordinating pretty well with, as you can tell right here with the 555.69. That's even funnier, I guess. I hope that's not somebody's dumb joke, but that's the reality of the thing, where you get the support and the resistance. In other words, we might sort of get back in, test part of it, right? Move through part of the gap and end up moving back down. Why am I saying we're gonna move back down? You see, this daily implies to us what it is forced to imply to us through the shorter time frames. On the other hand, the weekly, because it takes a lot longer to build up and create the structure that it does, oftentimes implies what the market makers, or rather what is more liquidity, actually doing, especially in comparison to the day. Because think about it again, how many days you have in a week, how many days you can extrapolate looking at this chart, sort of moving onwards and understanding, looking through the momentum sort of looking glass, and potentially extrapolating what the market is going to be doing in the next several days. Sure, it can be moving upwards in the next several days, but if your weekly implies to you potentially that you're going to be spending several weeks doing that, what you're going to be doing in the time span of several weeks can overturn everything that was done in the span of several days, and in fact be a lot more significant. In fact, it's those several days, right, multiplied by potentially up to 4 times, and sometimes even longer, right? We can dwell in these processes sometimes months at a time, and I'm talking more than 2 or 3 months. You can actually look at history, and I've spoken about this in my videos before. So why do I say that? Look at the weekly. It's all very simple. The weekly, we're already moving downwards. We're very bearish. And as I said before, the same way when we move up, when the trend is upwards, right? This is an uptrend, very distinct, very clear. We still have corrections, right? That's a normal process on the movement down. Likewise, vice versa, it's going to be when we move up, we have correction. When we move down, down, we're going to have correction. I completely draw it upside down. But what I was trying to say here is when we have movement upwards, we have corrections down. When we're going to be moving down, we're going to have corrections upwards, which is going to be opposite. And we're getting distinct signs clear of that, exactly that formation. The question is, how long are we going to retain this trend? Of course, from what I can tell from the weekly, it's going to be at least retained for the next couple of weeks, which will allow us then penetrate into the oversold territory right here on the bottom below the 20, which will again be amplified during the process. You need to understand that this mere process that usually happens right here in this territory and below the 20, right, in the oversold territory, usually often dwells for at least about 2 to 3 weeks within itself, let alone so the process. Then this altogether, you're looking roughly at about 5 weeks, right, of downwards movement potential, and we could be actually dragging it out depending on how quickly we will be doing the convergence, divergence, and basically going back up, having potential bullish momentum. And remember, the way the trends work, sadly, this is a very rudimentary, very simple indicator. It does not allow you to perceive the overarching trend. It has a benefit of it being linear, but the downside, the drawback, is actually the fact that it's linear. It doesn't allow you to see clearly that the trend that you're building up or getting into or switching over can be opposite of what you're doing, right? The only way to recognize that would be looking at the larger time frame, which I told you guys before. What we're seeing here is very bad, very indicative of many months ahead of that correction, and we are already starting to see the signs of that turnaround that will start occurring right here right here on the weekly. Remember, this is a sort of a micro dimension of this. If you know how to extrapolate when a certain overturning is starting to happen, by the way, it's also applicable to the smaller time frames. The thing is that oftentimes people get misled to how quick these move. The shorter the minute charts, right? The 1 minute, the 5 minute, 30 minute, 45, or even the custom made ones, everything below the hour, oftentimes moves so rapidly that oftentimes people just by the time they calculate it, it doesn't matter. But also what happens, what you're seeing is too far granular. You're basically seeing the in-between of the process, and you're getting almost like a horse with a retainer on its face, getting tunnel visioned, and you're not realizing that you're about to fly off the cliff in this location, in essence. So you're kind of getting caught up with this. You don't realize actually the market will go for a correction, and the overall trend is overturning, as I implied, by the way, which we can start to see right here. It's starting to get the opposite. In other words, prolonged movement downwards and a short correction upwards, right? That's kind of the signs that we're starting to see, and more so the signs of what we have potentially in the fuel tank, already implying that we have a lot more negativity in the system, potentially bringing us lower and lower and lower, right? The supports and resistances is something I've mentioned in yesterday's video. I'm not gonna go over this, at least for right now, maybe later in the video, but let's focus on this. So what we're seeing basically on the monthly is not yet come through, because again, remember, these processes usually take a while, right? Notice we don't have a long time. We have merely 6 hours before this month ends, before we go into August. Well, my favorite month of the year. But I have to admit it to you guys, and it's kind of a known issue. This year's August looks like it's going to be very much normal to its sort of seasonality. Hey, good morning. Hey, KK, hey. Good morning indeed. Sort of according to the seasonality, is going to play out as normally expected. So expect a significant downturn, and you can see it right now on the screen. It's not my opinion, it's what I see. Remember, none of this is financial advice. We're all adults here, or at least supposed to be, or at least supposed to behave like ones. In other words, fortify, your mental stability when it comes to the market, your emotional status, so to speak. Fortify yourself, process this. If your children would have been in a similar dilemma, you would have been telling them, hello, work email, work email. I wonder who this is. You would have been able to tell them to, man up to the task and get stronger, right? To pull through rather than to break down. I'm not gonna say and pretend potentially what I'm seeing here is gonna be easy. But I do think that in the community, again, a gigantic shout out to the Discord members. We preach continuously that the idea that people sort of, Tom says it the best, time in the market always beats timing the market. Okay, that is very true. But it also requires certain mental strength to be able to pull through these processes when the market pulls back down significantly. So, and also this is where technicals shine. Technicals allow you to recognize these moments, and instead of buying with both hands in and then realizing that the market is going to go for a deeper correction, instead of you could have used your capital far smarter anywhere along this line, or especially recognizing where the bottom happens. As we know, once we bottom, it doesn't just, we don't just correct back up in a second, right? And the bottom could be even lower than expected. We know that the market can stay irrational longer than we can stay solvent in both directions. And those who know more advanced technicals and harmonic patterns and so forth, and understand how the market, the cyclicality, understand also that it is going to be far more normal, and the abnormality that we had so far, it is abnormal. What we might potentially gonna get is the market going back to normality. And there are a lot of signals and warning bells that are going off all over the market. If you look at the individual assets or on the longer sort of time horizon, it doesn't matter whether you're looking at the large caps, medium caps, the small caps, doesn't matter. You're starting to see this all over the place. Tesla, for example, is again having quite a significantly nice day today, but all in all, remember what I told you. We're gonna see, we're gonna be forced probably to see this retest of that support and resistance that we have from above. Come on, where is it now? Come on up here. Oh, it didn't correct yet. Give me a sec. It does that sometimes. Yeah, here it is. Now it's inbound. You can see we're testing it right here, where this is where the price action and the current candlestick is being generated. You can see we're right above this support in this instance, it looks like, but really if you're going to zoom in, you're going to realize that what you get is more of this. Again, this is sort of the granularity form. It gets readjusted according to the time frame. The line doesn't move. What gets readjusted are the candlesticks. Remember, you can notice by the sheer price location, it stays the same. So we haven't even penetrated through. So far, we're testing it, and it actually is resistance, not support as it appears on the larger time frames because it gets deviated. Okay? So what we're seeing is, again, very normal behavior. We had a grand movement downwards, right? Don't be surprised if you're going to have a retest. These same resistances, you can see we're still maintaining them. In fact, the way we are positioned right now, we might still test it, not the way we have it right here. We might actually find the price action ride this channel, right? The top of the channel. That's going to be completely normal. Do this wedge, something you probably hear in the market very often. The price action will get locked in here, test this several times, either penetrate out, again, making the bulls happy. The problem is if the overall market will have a bad day today at the end of the day because of the FOMC, because people's expectations and the Fed, you know, kicking the can down the road, which they have been doing and probably will persist on doing because they have no other choice. People keep on asking, what are the Fed going to do today? You need to understand the framework of limitations they're working with right now. So it's not about what they want to do, it's what they can do at this point. And if they are forced to cut rates, which they will obviously, guys, do you really think if they're forced to cut rates, they will admit that they're forced to cut rates? No, they're not going to do that. So this is why, this is where technicals prevail. Technicals have all the emotion in essence already calculated in such a form that you can almost you're able to see how the market makers positioning themselves towards the event, almost as if they know the outcome, right? So maybe Tesla looks like potentially it's going to be working towards what we would consider more of a bullish formation right here, right? This bullish flag. But in reality, you have to understand that Tesla works in the context of the market. And if the market will shit the bed, Tesla will not be having a great day. Neither Apple today that we have, and we have a lot of things that could potentially disrupt the way processes are already going. I already said this about NVIDIA, which today having a bit of a recovery, right? We already tested, by the way, the 100, which is a significant psychological level, so no surprises there. You can see right here, not a surprise, right? But all in all, if you're going to look, if you're going to zoom out for a second, so people often like to sort of focus, well, NVIDIA is up today compared to yesterday, but compared to another day before and compared to another day before, and if you zoom out just a little bit, overall, let's be objective about things. NVIDIA, all it's doing is exactly what I said. Guys, it's moving down and it's having a breather. That's normal. The thing is that the trend is distinctly downwards. So it's normal that we're, you know, hitting the top of the trend channel. I've spoke about these are ranges that we move within, not just a support or resistance. In fact, the price action works in such a way that it can penetrate and ride the top still going downwards. It doesn't matter. This is not indicative. A breakthrough the channel is not indicative that that's it. Everything is fine and dandy. And those who are attentive, again, notice 30 minutes on NVIDIA does not look good. Only a matter of time while we have our convergence and start going down. That's it, done. So you see, not everything is as seems. People often in the market get confused. It's like if the market has been moving up, that means it's gonna go up. No, in fact, it's more likely that the market has been moving up. It's either gonna correct or the market has been moving up because it's correcting. one way or another. It's going to have to do one or another, depending what is the overall overarching trend. Right now, it seems like we moved from a bullish to a bearish trend. How long will this trend maintain? Hard to say. I'm just telling you what I see as we go. What I'm saying also, that the soil within which this plant is in is not too healthy right now. So as as I said, I wasn't lying. I am gonna make the bulls happy, but just temporarily so. Because the reality is that the overarching trend doesn't change, and when it will change, you guys know I'm not biased into any or another direction. I will simply tell you what I see. More so, it will be rather evident on the charts, right? And more often than not, it's going to be the flip over, so it's going to be counterintuitive. It's actually part of, if you may call this a skill that people learn, to how to do the counterintuitive thing. It's not about being contrarian, it's just simply recognizing when's the right time to do so, simply because that's the nature of the market. That's that. Let me look at the chat, because I feel like I neglected you guys for a second here. True Fed ain't gonna show their heart, their hand. No, absolutely, they're not gonna do that. They can't. You need to understand the circumstance as well. The Fed are stuck between a rock and a hard place. We, as public, as a market, as a whole, are very reactive, and we're very emotional, and more so there's a bunch of stop losses and such that can trigger one another, in essence, starting an avalanche effect as well. So in essence, a good metaphor would be, the Fed are in charge of our emotions. Our emotions are in charge of the bazooka that we're holding inside of a tiny room. At the end of the day, the Fed will probably survive it, but they understand the implications of making us unstable and shooting that bazooka in that tiny room. Everybody's gonna not have a great day. At the end of the day, the Fed will have to deal with the repercussions. The repercussions would be as such that there will be a gigantic sell-off. How bad? Far worse than what we've seen in recent times. Far worse. Why? Because again, we were incentivized to do so. So it's almost sad that individually, every one of us could be quite mature and an adult person, but you need to understand the market is not comprised out of millions of you. Okay, the market is comprised of all sorts of people, and lots of them potentially are gonna overreact. A lot of them don't understand truly how the market works, what motivates the market, what momentum is, what technical analysis, and all sorts of people, right? So the outcome is not going to be necessarily what you would expect. And as a mass, as a whole, we react in very irrational ways. We just panic very rapidly, and we panic not because we panicked. We panic because the rest of the other people are panicking. We have no choice but to panic, because there's a room full of panicking people and you're inside that room, if you will. And some of them have matches. Okay. Well, you should have been more prepared for this, Alex. You and I spoke about this. Alex, by the way, those of you, Alex is a student of mine, a major of my academy. And he should have known better. Alex should have known better to have more cash. Less triple. Yeah. No, but we spoke about this. Yeah. I'm currently holding 1,500 S triple Qs, and in fact, I don't mind if the market is going to have a bullish day. I'm potentially going to load up more. As I said, I'm DCA into it. My average right now is around the 14s, but I don't mind, because I do expect a significant correction in the market. In other words, I'm expecting to capitalize quite well on my SQQQ positions. Alex is quite aware of that. Noob trying to understand, learn. I was a noob as well. Nannies, I was also a noob. We were all noobs at some point. That's great. That's wonderful. That makes it that much more exciting. It's fine. We all go through these processes. As long as you listen, pay attention, actually understand, don't understand, ask questions, that's fine. Join the Discord community. Those who don't know, there's a link in the description below. Of course, you can sign up to the Patreon. It's only $10 a month, and you get access to the Zoom calls where I talk quite a bit and answer a lot of questions individually and whatnot. And in general, I hang out in the Discord quite a bit. I've built The server, Tom and I, we have a combined server. Tom Nash, shout out to the legend. Right now, have an awesome vacation. Love you much, brother. Brother from another mother. If not him, I wouldn't have not had this channel. So everybody here have to thank him for the existence of this channel, me doing this. He definitely pushed me a lot to do this. So shout out to you, brother. Suppose PLTR is also starting corrections. I actually spoke about this in yesterday's live work. You've heard me speak about this. It might take a little while before the small caps, the Russell, which inevitably affects Palantir, will start a proper correction. So you still might see a bit of a movement on these small caps upwards, simply because of the sentiment. And especially today, I mean, we're having a bullish day. It's not like there's a justified reason for them to move downwards. And more so, if you follow my recent video that I've done, and I've covered Palantir as well, among other things, I said Palantir is going to be dashing between these levels. It doesn't matter. It doesn't seem like it's able to penetrate that 2773 levels you see on the screen right now. More so, right now, it's more so stuck between these 2773 and 2695, call it 27, but essentially that amplifies that more so. And in general, this whole area, this whole range is basically an entire minefield that I really cannot see Palantir breaking through. And even if it does, guess what? I don't know why I don't have it right on this chart, but there's another significant resistance around the 29, then, and it's very strong, and then you have the 30. If it's going to have a tremendously bullish day, it might make it 30 on the best day. Again, those who do not capitalize on this, it's meaningless, because overall, all in all, the trend will catch up. Even with the Russell, you have the Nasdaq and the S&P overweighing the Russell. Eventually, the conditions and the environment overweigh it, and it will get in line, as you saw yesterday. I've explained this, by the way. I still have the chart. As we can see, the IWM and the S&P basically move in unison. In fact, if you readjust this, you're going to realize how crazy and perfectly combined it almost moves. For every movement you have, right, they're almost identical. For every single movement, you're going to have its own. They're basically to their own each level, of course. And sometimes the sentiment has some effect. You have news and so forth, right? Different companies, but still, all in all, they move in tandem. Okay, even when they have slight deviations, like for example, right here we had another correction, right, on the IWM, and you didn't have the same one on the S&P. That's normal, but all in all, it's the same movement. You can tell. Okay? So all in all. And it has been this way for quite a long time. Pardon me. I have the problem doing there is a bit of a flaw, by the way, with what I'm doing right now. And a bit Richard Feynman would probably say that I'm cheating very badly, you see. Yeah, that's what he would say right now, and I am, in essence, because the way it should be done is the other way around. You should be doing this comparison starting from the S&P chart and overlaying the IWM, not the other way around as I have it this way. It's going to be a little bit easier and just better to see and understand what it is that you're looking at. Back to the chat. Okay, we'll answer that. Props to Greg. I have just say so. What, Alex? Thank you, brother. Much love to you, my Canadian brother. Canada. Any idea when IWM will start to rally? I mean, it is kind of rallying recently, while you're starting to see the opposite with the S&P starting to more or less start to have to curve down. You already see this movement, right? You can see the difference between the two if you compare, while Russell hasn't really got to that point, and when they will, the Russell is catching up with the S&P while the S&P is turning around, if that makes any sense. What is that? Nannies. So when you say more cash, you mean cash to buy when the market goes down? Yeah, absolutely. Yeah, dry powder, in essence, correct. It's the reason the institutions and the sort of the people who have higher liquidity always make it and get richer, simply because they don't go into a firewall fight going, having five bullets at the best, or maybe one in the chamber, and that's it. That's kind of how the average trader, the retail trader, approaches the market, because you guys either go full force all in and all sorts of things. And even when you do DCA, you do not really plan out. You need to ration your abilities, your liquidity, the same way you would ration, your bullets going into a firefight, or ration your food going onto a long trip, right? The same way. People don't really do that all that well. This is why in the community we speak quite in depth about portfolio management, what are the right ways. Oftentimes, in fact, it's disturbing how often I get asked these questions. How should I do these? Should I apply these tools as professional use? Of course. Just think about them, process them. Don't just, dive head first, right? Use stop losses, take profits, trailing stop losses. You do everything you can, but don't just do it in a, I'm sorry to use the terminology, in a dumb way. Calculate, think, premeditate before you do anything. Smash the like. Thank you, Alex. I love you much. Thank you so much. Work, my pleasure. Thank you guys. Thank you guys, everyone who showed up. Thank you, everyone who's gonna watch it, especially that far into the video. I just felt like it's necessary. These days are very, very difficult, and I can understand it really is very confusing. I'm not gonna lie. Even people who, such as myself, looking in the market, this behavior is very abnormal, no matter how you flip it, right? So, all in all, I understand the confusion, but I want you guys to be able to at least see what I'm seeing. And I don't like to be biased one way or another. I never am biased. My positions are according to what I see. I'm never going to tell you a story because I have a position. If I have a position and suddenly the story changes, I'm simply going to adjust the position. Not going to continue pushing the story like a goat. Not the good kind of goat, the bad one, like a donkey, Oh, who was that? The name of the YouTuber? You guys know? Who kept on saying like a donkey? Great guy. We love him a lot in the community. Who knows? Thanks for answering the previous question. Sure, Redex. No problem. It's just that you need to understand that even the context of the terminology when I say rally and what I mean and how long and all that. Raylo, hi Greg. Can you explain how MD has single-handedly pushed up an entire Nasdaq after Microsoft? No, it's not just why do you think it's single-handedly? But first of all, Microsoft had its correction. If you would have watched yesterday's video, I've actually said yesterday we were here when I was making my live. You can go there and watch, and I said that probably what we're going to see is basically a continuation of this correction after the revision of the earnings, right? Because at first they came in as negative and all that usually causes this behavior. So very normal, and I've expected the market to correct back up, right? And exactly, literally, if you go watch yesterday's live that I did, a handful of hours ago, the market so far played out perfectly as I said. I hate to be an ass, but this entire video could have been and I told you so video basically. So it's not just single-handedly, Raylo. It's all of the forces. And in fact, it was kind of implied through the S&P as well. Guys, look at this way. The assets are little floaties inside of a big river. The indices are the river, okay? So the assets can only do well if the indices are permissive, okay? They don't have to, the indices don't have to be doing well, but they definitely can be doing bad and the assets will be doing well, right? It kind of goes hand in hand, okay? I hope that's understood. Have a great day, Joker. Have a great day, Joker. I understand you need to be jumping off. Guys and girls, questions. We still have time. I'm still gonna hang out here on this live for a little bit. I want to be observing how the market is playing out, and I'll allow you to have questions and all that wonderful stuff. Those who are interested in learning technicals, more advanced technicals, those who are in our Discord and want to know, I still have one final spot for the public members, although I'm probably gonna have another spot soon. That's for the public members, and for our Patreon members, I still have 2 of them, which means I'm gonna have 3 soon. So yeah, I mean, don't miss out, because literally, first of all, I'm gonna take a bit of a vacation towards the end of August. So, because I'm gonna have a birthday at the end of August, so I want you guys to be able to get some lessons before that happens. Those who sign up. What else? What else? What else? I think that's it. You know, like, subscribe, bell, all that other nonsense. Share. Throw the YouTube video at people on the street. Ask questions. Thanks for answering. Sure, Alo. I mean, at first you wouldn't know, but at first I was really struggling real bad with doing the lives. By the way, so far, guys, as you can see, we're moving towards closing the gaps, right? Oh, God damn it. I wouldn't be able to draw a straight line to save my own life, apparently, but yeah, you get, get the idea. But, oh shit, that looks bad. So you get the idea. It looks like we're closing the gap here, right? That's the gap. That's a hole. And it looks like the market, I said this before, guys, the market is often attracted to closing these gaps. And I said this literally as we were going, and I think I made a live, you know, as we were going the other day. And I said, guys, this is not indicative of anything yet. I'm not going to be biased. And there is high potential of seeing the market closing that gap. I'm struggling to see the market closing. There's another gap high above us, higher, right here, which I cannot see happening at the moment. If you're wondering what am I talking about this hole. But this was definitely very, very possible, and I said this multiple times, and here it is, guys. And I'm not sure we even have enough momentum to actually close the whole thing. I'm curious. Let's see how we're doing so far. I mean, no, it looks like we have enough to close the whole thing. Just kind of judging based upon what I'm seeing on the chart as is. Great day. Bye-bye, everyone who's dropping off. Bye-bye. Do you see NASDAQ to run to... I can't see because of this goddamn icon. I really need to switch to the other thing. I need to switch to the live chat so I can see it, not hiding the thingy. Hold on. Well, I'm just gonna guess. Return to low. Yesterday between now until early November. Okay, good question. Let's just post something so I can be certain of the question. You know what? Let me just ignore that. Ignore that, guys. Yeah, lows as I thought. What lows in particular? Like, can you be more specific? I mean, we can look at the NDQ right now, right? Can look at the NDX, but sure, let's look at the NDQ. Let's look at this for a sec, okay? I mean, ignore this. We don't need this for now. No, we don't need this either, actually. But, by the way, you can see I've kind of projected all of this already. You guys, that was unintentional, but I already projected all of this before. Can you give me a low? Can you tell me what that is that you're talking about? I mean, because November, well, how rapid? Let's see, do I have it here? No, let's do this for a sec. Where's my stochastic RSI? Here's my stochastic RSI real quick. Let's, I mean, interesting. That's actually a very interesting question. You know what? I wonder. You make me wonder now. So I'm gonna need, nope. But I'm gonna need this for a sec. Let me just, so what's the level? What are we talking about? Raylo, can you give me a low that you're expecting? Kind of what your assessment, because I can tell you what I see. I can tell you that it looks bad. Shit, it looks bad. I mean, I mean, do I really have to say? Here it is. You're seeing it. How quick? I mean, so you're looking kind of here. This is your, right? We're talking, and this is actually very slow. No, I have an issue with the way the tool works. I would say, shit, yeah. I mean, 18. Okay, that's gonna be a problem. But you're probably looking at finding some, give me a sec. Give me a sec. No shit. Yeah, actually, that looks horrible. That looks bad. That looks bad. That looks bad. That looks like low. For now, I'm gonna just assess that first of all, there's a ceiling here, obviously. So I'm gonna eyeball it. Don't ever do that, kids. Uncle Greg is doing something should not be allowed. Don't ever eyeball shit, although it's conveniently matches with the tool. I mean, okay, so wow. I hate to say it, but we might be anywhere between 16, 7, 6, 4, the way you're seeing this on the screen, anywhere between this and this. So anywhere between 18,362 to 15,318. Does that answer your question? God damn it. QQQ, deep in the poo poo. Deep, very bad. Very bad. QQQ. QQQs are just starting, and this is the weekly. Let me just. I mean, it's all. You see, they're all identical. You need to understand that one is a derivative of the other, and that's why I always say, guys, go to the source. And if the source looks like it's about to shit the bed, the derivative doesn't matter. Literally, even if the derivative is showing the opposite, just to let you know. Wow, that's a great question, Rex, but it's so individual, Look, uh, it depends on what your portfolio contains already, what your targets are, what your capabilities. There are certain questions that need to be asked and answered before I can objectively answer that question. And at the end of the day, I can't really answer that question other than tell you that there is knowledge and sort of try and point you in the direction of the knowledge that you need to understand to be able to conclude these conclusions on your own. I cannot advise you on this sort of thing at the end of the day because the best conclusion will be from you. I can tell you how I would approach the situation, but I would not necessarily approach it the same way you would, if that makes any sense. Around 4555. Shit, I mean, NASDAQ in correlation to, I would go to the source, but since we're looking at the ceiling, it's probably gonna be, just to put it in simpler terms, lower. You're talking about like 400-ish? You're potentially looking at 400, in the 400 area, because there's that ceiling. That's the, but it's, look, they don't move one to one. The fact that if we're seeing that, I'm assessing that the ceiling is what's going to be basically our support looking at the NASDAQ. And this is why I said, guys, don't ever judge. Look, make your analysis based upon the NASDAQ. And if your movement is, and if your position is on the Q, execute based upon what you see on the NASDAQ. Because the source is always right. Okay? The derivative... There are reasons, again, in essence, the derivative is shorter duration. It's oftentimes going to get even the tools, the indicators that you're going to use upon it, they will not be showing you the same indication based upon it not having the same price action to derive these signals from. You understand? The price action will, over a period of time, will look different. And subsequently, the tools that will use this data to derive information for you will be wrong. Hence, your perception will be wrong. Go to the source. Any other questions, ladies and gents? You can see everything on the screen, guys. There are no biases. One of the things you learn in the industry, emotions, you leave them outside the door. It's pointless. The emotions here are not going to help you at all. Okay, you really have to leave them outside the door and be very meticulous and calculated. Start. In fact, at times maybe it's even better to keep put these $100 aside, don't DCA, right? Sort of accumulate some dry powder, and then instead of having $100, you're gonna have what, 200, 300, 400, 500. If the opportunity is really good, you might allow yourself to, put a little bit more liquidity this month around, just because the opportunity is that special and doesn't present itself every other, Saturday or whatever. You get the idea. Well, Saturday, funny, chose the right day. But you get the idea. Yeah. And really does depend. I understand the fees issue. Uh, you are saying certain things that kind of trigger things that I like to see, and on the other hand are very problematic. The fact that you have fees, that probably means you're trading with a proper institution, with a proper bank or whatever, or maybe you come from a country where they actually have fees, although they still serve you like Robinhood. But just, guys, to let you know, I've worked in the industry as an account manager, a senior account manager. I've managed accounts. Trust me, guys, there is no institution other than the four maybe major ones in the US that I would like to work with, and I always would prefer a local bank to me that will give me a better service and far more accessible. So at the end of the day, ladies and gents, trade with the bank. You're always going to get better service. The platforms are far more reliable. Your information is not going to be sold, and various other benefits that I can't even mention. Again, to each their own. I, for example, get from my bank, just merely by having an account with them, I get TipRanks for free. And if I calculate the commissions on an annual basis and how much I would pay for a TipRanks subscription, what ends up happening is, if I can look at it this way, I can say, well, I either have no commissions on my trading account and I get a discounted TipRanks, right? Because the TipRanks is for free from my bank account, right? Or on the other hand, I do pay commissions, but then again, I still have the TipRanks account that I would pay more for. You see, so all in all, the banks would often give you better treatment. The more money you have with them, the better conditions you can ask from them. Yes, they can decrease certain commissions. So trade with the banks and always have more money with them. They will allow you to have more liquidity, but never buying credit. Never use credit. And try not to be levered. Being levered is not a good idea. It's not good. Run from leverage the same way you run from fire or poison or something like that. Alrighty, ladies and gents, go ahead. Final questions before I run off. Sure thing, Redex. My pleasure. Thank you for showing up and taking part in the call. All right, well, ladies and gents, again, a couple more minutes. If you have no questions, I'm going to be dropping off. Those of you who are more interested in learning more advanced technical tools and learning how to do this properly, I have an academy that to sign up for it, you need to have a short call with me, a bit of a Q&A, just to make sure you really are into this, and again, not to waste any of our time, nor yours. There's the Patreon, of course. You can then join our weekly Zoom calls, although we're gonna have a bit less for the following month as Tom is away, although I am trying to sort of maintain and have hangouts and whatnot in the community. Of course, join the Discord if you have not yet. The links are down in the description below. Thank you, Greg. Nennies, thank you. As I said, thank everyone. Thank you all for showing up and participating and just listening and whatnot. I love and appreciate you all. What else? I think housekeeping is done. That's it, ladies and gents. Bell, like, subscribe, throw the video at people. Work email, whoever you are. Also, thank you very much. Have a wonderful day, ladies and gents. See you in the next one. Bye bye.